Hi everybody, in this video we're going to pick up on the last one talking about appraisals, and in this one we're going to be talking about the rent roll appraisal. Now there's really two types of rent roll appraisals. Traditionally what a rent roll appraisal will be is the appraiser comes in, he takes a look at the property to figure out what it's worth, but specifically he's looking at what is the rental income that's expected for the property in its current condition compared to other properties in the area. He will actually generate what's called the rent roll and show, hey, this is what the property you can expect monthly, annually, and so on and so forth. How much degree is at the appraiser's discretion, but that is the end goal, to show a lender what will this thing rent for. Or if you're a buyer, you may just want to know and order your own appraisal for your own purposes. There is a second kind of rent roll appraisal though, and it's gaining popularity. You're seeing it more, and that is, what if it's a short-term rental? Now most people at this point have now heard of Airbnb, but Airbnb did not start the vacation rental movement. Vacation rentals have been around for a long time. There was a site called vrbo.com that's been around long before, and then AT&T is what kind of took this concept to it's become now a household name. With a short-term rental appraisal or rent roll appraisal, it's a little bit trickier because the information tends to not be public in any way on what short-term rentals are. So the appraiser literally has to go to property management companies to get this type of information. The challenge is, or he can use public websites such as Airbnb.com, vrbo.com. But now the challenge is, if he goes to property management companies, many of those companies may not be allowed, in fact, maybe none of them are allowed to share that information by default because of disclosures, privacy, that sort of thing. Maybe they can ask the owner and the owner may be okay with it. You know, it's a case by case. I've been down that road, and I remember when we went through it, it was very difficult to ascertain this information. And it's very important because usually when you're renting a property short-term rentals, your monthly income will be higher than a traditional rent roll appraisal. And so that can make or break a deal. So if you're doing short-term, don't be surprised if you got to have more legwork put into it to get data that is reasonable and accurate for the property you're trying to rent on a short-term basis. It just takes more work than a traditional rent roll appraisal for a typical rental. So those are your two types when you're dealing with rents. Thank you so much.